Well, good day all. Ira Epstein, and here we are with your financial market wrap-up. And your wrap-up is for the evening of Thursday, February 8th, 2024. Just getting on right now, about 5:40 p.m. Central Time. What a day. This was not a day about trading. This was a day about presidents. We had first, the important part of it was President Trump's day in front of the Supreme Court. Now, he did not appear, but you got to hear the audio today. I was listening to every word of the questions that the justices were asking from the consuls for the state of Colorado and for President Trump's attorneys. And it certainly walked away, and the scholars said this, CNN, CNBC, Fox, Bloomberg, that it certainly appears that the justices are going with President Trump. The states do not have the right to decide the Constitution. What is insurrection? They do not have that. They cannot take the president off the ballot, is the way that I think they're leaning. Did you hear what I said? I didn't say that's what they decided. But those questions, if you watch them and how pointed they were, I think that's exactly where you're at, because otherwise you've got 50 some odd states all deciding, well, what part of the Constitution is this? What is that? Now, they don't decide the law of the land, and that's what this is really about. I'm in a state that wants to take them off also in Illinois, and they said they would do it by February 16th, that they're going to do that. I don't know. I think that the state of Illinois got a rough hand here in what I heard. We then saw Special Counsel Hur, I think that's how I say the name, H-U-R, decide on President Biden and his taking of classified documents. Whoa. It goes beyond did he take them. It goes into senility. And basically what he's saying, if they brought charges, read the report. It's 400 pages, but it's capsulized on Bloomberg, all the big parts. Read the key parts to this. And it comes down to that we have a president that they put an elderly gentleman on there. He doesn't remember the date his son died. He doesn't remember the names often of the different leaders that he talks to. Some are dead, and he keeps mentioning them as though it's right there. He doesn't realize often a lot of things. And this is what we're dealing with. We have a president, I think, that I didn't say this, remember this, okay, that we have to do serious thinking about. He's got this problem now. 4 more years of this, is that what we all want? And I know what I would think, and I want you to understand, this is not about politics. This is about age. I myself am in my 70s, obviously. I'm not fit. I wouldn't want that job. That's a killer job. You got to be at the top of your game. And that, read the report, read the synopsis, read the conclusions, read why they don't want to charge, read the fact that there was hiding, and the FBI had to get in and find tapes that were erased because of ghostwriters that the president has, and he was having them do certain things, and they had to take it back. Had the name been Trump, this special counsel would have said, go after him. But the name is Biden, so now he's an elderly statesman, and we're not going after him. There's a double standard here, is all that I'm saying, all right? The heck with both of them, but there's a double standard. It was quite a day. So I think it was a negative for the Biden camp. I think it was a positive potentially for the Trump camp from all that the legal scholars are saying. Now, as for the market, tomorrow we get the potential for adjustments on inflation. Once a year, the Bureau of Labor Statistics comes out and they start doing all kinds of adjusting to last year's numbers. Normally, it doesn't matter. You get a 2% adjustment one way or the other. It doesn't matter. That's not what I think. I think you got to be on your toes tomorrow. Here's why. The market wants to see that the Fed is ready to let loose. The market wants to see that the adjustments they make says inflation's falling faster than it is. The Fed should move quicker. On the other hand, the stock market's going through the roof. The market is saying to itself, everything is rosy. What if that rosy is that inflation didn't fall at the pace that we have been told, and it's actually staying stronger for longer? Well, what does that do to interest rates? I'm just warning you. A report out of left field. There are no other economic reports. It's normally not an important one. Start paying attention. Tomorrow, this could be a game changer if it's a big change in the numbers. If it's a small change, another event, so what? Then we move on. When you look at the S&P, all-time highs. What more can you say? If it were to close right now, this is it. You're up 0.71%, but it's an all-time high number. You're at the 5,000 level. I mean, wow. Unbelievable. And it's just crawling there. It's inching its way up, but it's a continual inch. The market got the classic case where you had a pause here right at the end of January, and then you started that pattern of higher lows, higher highs on the swing line. This is a swing line. And what a swing line does is you look at the time frame behind you. Swing lines work on 5-minute charts, 1 minute, 15, 1 hour, daily, monthly, weekly. It doesn't matter. I created the rule so that way back when, my son who's just going to turn 40, I think it was 13 when I created this indicator, he could walk in a room and tell people what a trend was, what would change the trend, where it would neutralize. Well, you'd have to get through this low to neutralize it right now. The market is over the 18-day average, so the bias of the market up. And the Bollinger Bands are at 50-57. Do you remember 5 weeks ago, we were talking at the end of the year that I refuse to every year do a synopsis or a projection or whatever you want to call it as to where the market's going this year for different markets. I found it to be fool's play. Well, this gives you an idea. How many of the analysts were saying 5,000 for this year? We're already there. So does that mean if we go up another 10%, we're at 5,500? I didn't see any analysts calling for 5,500. Don't get me wrong, I didn't see every analyst out there, but the big names weren't doing it, the big banks and so on. 5,200 was about it, and you're within striking distance already, 185 points from it. Are we overdone? Are all the earnings so good that the market keeps carrying? What do you do for an encore here? Does this mean a 6,000 market? Why not? I want to be the first to go on record saying that. Why not? What if we find that inflation has fallen more than we thought? What if the Fed then says, well, we're too restrictive? I don't understand how they can come to that conclusion given full employment. And if inflation were falling, why do they want to goose inflation back up? But people will say that. You always got to be ready for what could be. When we take a look at the slow stochastics, please learn slow stochastics. At the end of this video, I've got another video that comes up on it. Invest in yourself. It's $100 or so. You will learn the course. You will learn how to do it. You will get from me in the morning. You'll come into my Spider and ETF, my Spider, ETF, and my futures videos where I review this every morning with charts as they're live. And I'm explaining it and detailing how to work with that. As long as this is here, you close your eyes, you want to be long. It's that simple. When it's lost, when the red line gets under 79, a different event happens. You've got the same event in the NASDAQ. And are the markets moving higher? They are. The same thing in the Dow right now. I unfortunately had my clients get out yesterday. I'm aggravated with myself, okay? Here it is. I certainly know not to be short. If you lose the embedded readings, I certainly know what to do if that happens. And today, this market came alive and it said, I don't want to stay under the 18-day average anymore. That doesn't mean it turned bullish, but it's not bearish anymore. I thought the market might want to make a run, one final run to the lower Bollinger Band at 1924. It didn't do it. Instead, it came back up, got through the past high. Now you got a lower low, higher high in total sideways action. But for those of you that keep wanting to buy this, the others are at new highs, and you can't even get beyond sideways here. Not the place to be. Now, notes, bonds, they're all dropping. They're in downtrends. They are oversold. They're not embedded. But I tell you, as that's happening, it means real rates are climbing. Real rates are climbing, and the stock market's still going higher. It is an unbelievable moment in the markets. The Bollinger Band bottoms are in sight here and in the 10-year. We'll see if they do anything with them tomorrow off the possible adjustments that are coming out. And in the dollar index, I'd get worried if the lows of Wednesday, not today, today's Thursday, if the lows of Wednesday are violated, it would give me a signal that the market's through on the upside. I didn't say it began a downtrend, but it's through on the surge to the upside, and it's ready to probably come back and fight around the 103.5 zone for a bit. In the euro, we got to the lower band, we're getting a bump. So if you can get the market over Wednesday's high, Wednesday, not today, Wednesday, then I think you could get back up to the 108.50 area. The market is not embedded. It is screaming, don't be short. It hasn't said to be long. In the British pound, back and forth action. You tried to step out of the Bollinger Band. You hit the 100-day average and you bounced away. Is it a trend? Well, it is in a downtrend, but it's a market that where do you go short with a reasonable area of entry? You'd have to have a stop, as I read the chart, over the 126.45 level. If you got over that, you wouldn't be in a downtrend anymore. Not crazy about the chart pattern down here. In Bitcoin, you just got to the upper Bollinger Band. And I keep reading stories. There's no flows of money they claim coming into the different ETFs. In fact, net flows are out if you really look at what's going on with Grayscale and all. However, you're acting bullish, not bearish. But this today was a zone where I think pros were taking money off the table. On the energy market, when you look at Brent versus crude, WTI, ours, you can see a differential there. The market's fighting a battle again. It did this before at the 100-day average, void of a trend. You have a higher high. You have a lower low, just sort of drifting around here. And it's the same sort of thing that's going on. Today you got up and went both to the 200-day average and challenging about now the 100. Is there a trend there? I don't see one. I see a higher high, lower low. In other words, waves of money moving in and out because there's no trends at work in a lot of these markets right now, or they're so overextended, traders are just hitting and running and not doing much. Last night I mentioned to you, heating oil often has a seasonal move up at this time of the year. It's still doing it. Would I ever tell a trader to buy a Bollinger Band? I promise you that's not the case. And look at how you're still going down in the natural gas. I mean, you're now at $1.88. So for those of us that use natural gas, I am one of those, I'm getting a break this winter, although it isn't much of a winter. So you heard me talk about slow stochastics. You've heard me talk about enhanced Bollinger Band. Learn this because as you're approaching these lows, markets are almost magically, they find a support zone typically against them, or they run out of momentum as they get there. Important to know how to work with them. Take a look at this. By the way, to get the course, just move your cursor up here. Go to iraepstein.com under education. Invest in yourself. I'm Ira. You have a good evening. I'll talk to you in the morning. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.